What if we've been thinking about crypto adoption all wrong? Not through the next airdrop, not the new flashy L2, and definitely not another crypto casino coin dressed up as innovation. What if the real breakthrough starts with something so ordinary you'd never think twice? A phone bill, a remittance, a banking fee you didn't even know you were paying, and now quietly being replaced in the background by crypto infrastructure, working invisibly, settling transactions faster, cheaper, and more efficiently than any legacy system ever could. No wallets, no speculation, just better systems doing exactly what blockchain is supposed to do. That's the shift that Santiago Santos is trying to prove. And if he's right, it changes everything. You might know him from early DeFi, JPMorgan, ParaFi Capital, but long before any of that, he was just a kid in Mexico, watching his family get taxed 9% just to send money home.
And I hate that. It's just that if I were to define my life goal is to kill Western Union, and then you stumble upon Bitcoin and you say, wait a minute.
That moment didn't lead him toward hype. It led him toward a mission. And today, he's putting that mission to work, not by launching tokens or chasing after trends, but by rebuilding real world businesses using blockchain infrastructure under the hood. No headlines, no tokenomics, just cost savings, margin expansion, and a user experience that actually gets better. Because to Santiago, crypto's greatest strength isn't what it looks like, it's what it replaces. And when we asked him what crypto's ChatGPT moment might be.
And so to your point, like, what is a ChatGPT moment of this industry? It's called stablecoins.
This conversation maps out a new kind of crypto adoption, one that doesn't require users to understand the technology, just to benefit from it.
But there's something very concrete about buying a mobile carrier and cutting 50% of the cost. AI is not going to do that.
And if this strategy works,
and that's how you bring 1 billion users on chain.
This isn't a pitch, it's a wake-up call that crypto's next era won't be one with memes and liquidity mining, but with better products built on rails that nobody sees. If you care about what's coming, this conversation might just flip your entire thesis. I highly suggest you watch this until the end. And without further ado, ladies and gentlemen, let's get into this interview I did with Santiago. So for those who don't know you, just like, who is Santiago? Mm-hmm. What have you been doing? And what are you currently doing in this space?
Yeah, well, thanks for having me. It's really nice to be in this van.
It's so hot outside.
It's so hot outside. If I get kidnapped, folks, please, I'm in Dubai in the conference. I'm kidding, but yeah. So I've been investing in crypto since 2012, and I was at JPMorgan at the time in the investment bank. So I come from traditional finance, first doing investment banking, then doing private equity.
How'd you find out about it in 2012?
Oh, I was, one of those late nights waiting for like an IPO prospectus to print and flipping pages, and I stumbled upon the Bitcoin forum on Reddit.
Wow.
And I studied game theory, so it's a facet of economics, and so and I found that to be fascinating because at the end of the day, Bitcoin is interesting. It's an interesting proof point, but people sort of, if you peel it all back, which is why I think crypto is actually more important than AI, is because it allows us to coordinate better. When you learn about game theory, it's just a funky kind of term that economists use to say there's always friction. When you want to coordinate, say, where should we meet for this podcast?
Yeah.
You have to use certain piece of technology to say, or send a location. 20, 100, 300 years ago, that was incredibly difficult. It took us days to send, paper notes, pigeons, and then telegraphs, and then, the telephone, and then smartphones. And that has compressed the time to basically coordinate faster. And that has an immense amount of productivity for anything that you're doing. We're a social species. We want to do this. We want to interact. And that's what crypto allows you to do. Because there's the coordination problem. People talk about it as a Byzantium's general problem.
Yeah.
And by and large, like when I first read that white paper, I said, okay, you're solving this very well-known problem in academia that's a coordination problem, which is, everyone has their own different incentives and everyone wants to operate in their best interest. And in comes along a white paper, where back then you actually do read the white paper, and it comes along and says, we've actually solved a very important problem in academia, which is we can coordinate better without this suboptimal payoffs. And I read that, I'm like, wow, this is fascinating. And then I overlaid that, because I grew up in Mexico. And, when people move money from the US to Mexico, it's the second largest source of income for Mexican families. If you're going to use Western Union, you get charged 9%, and it's hidden, right? Because people walk into it's a convenient service, and they'll say, hey, we'll charge you 3-4%. Fine. But then they'll charge you more on the FX conversion rate. If you're swapping dollars to pesos, all in, if you're sending $100, your relative back home gets 90. And I hate that. It's just if I were to define my life goal is to kill Western Union, and then you stumble upon Bitcoin and you say, wait a minute, I bought a bunch of Bitcoin. It took me a while to go to the Soho Center in New York. It felt like a very sketchy trade. Like the infrastructure was not very much there. And I bought a bunch of Bitcoin and sent it to people back home. And I said, if this works, you can totally disrupt the movement of money internationally. So long story short, just to cut it short, I then was a partner of ParaFi. We were investing in decentralized finance. But, throughout my career in crypto and just generally, it's sort of predicated on this idea that crypto is a very powerful technology because it allows us to coordinate better. The financial system hasn't really been modernized because it was built pre-internet. And so I think we're at a time which is really exciting now where we can start using crypto technology to make it very relatable for people. And what I'm doing now at Inversion is obsessing about, why don't we have more users on chain?
Yes.
Because, you come to these conferences and people are talking about all the different benefits and it's all ideology. And I just got tired of it. I don't want to tell people about it. I want to show them how this is so powerful. In the same way that the email was so powerful to tell people the internet's actually really cool piece of technology that's, not just uploading pictures of cats. And I think we're at a really interesting point in the industry where we built so much really good tech, and I would characterize this as crypto enabled, which is the best technology is invisible.
Yes.
And I think crypto will be invisible for people. We shouldn't expect that people are going to have knowledge and understanding of key management and setting up wallets.
No.
What I want to do is buy a business, make it vastly more efficient by adopting crypto rails where the user never sees it, but they'll definitely feel the impact.
Yeah.
They'll stop paying the fees that we talked about. They'll get their money faster. They might be able to get credit faster, better, cheaper, right?
I call this often, the kind of the ChatGPT moment for crypto, because, I think AI was around for about 35 years, something, 30, 40 years before ChatGPT came out. So really it was largely unusable for most retail people, most consumers, until ChatGPT, that killer app, came along. Do you think that the kind of ChatGPT moment will come from something like you're describing, where a big existing business with millions and millions of customers are already using it, and then their service gets better, the user experience increases because the business has modified its ways into using crypto rails and infrastructure?
Totally. Look, imagine I buy a mobile carrier in Mexico or Latin America. You live with a customer 24/7. All of a sudden, as that customer...
Did you buy a mobile carrier?
I'm in the process of it.
Okay.
Why mobile? Because you live with a customer 24/7.
Yeah.
And there's no reason why your mobile carrier can't be your bank when money's digital.
Exactly.
And
it is in Africa usually, right?
Totally. M-Pesa has really done some interesting stuff. And so to your point, what is a ChatGPT moment of this industry? It's called stablecoins.
Yeah.
Everyone in the world wants access to dollars. Yes, the dollar, ladies and gentlemen, will continue to be the most sought after store of value and gold, but the dollar. And so so the question is, okay, if stablecoins are so great, why don't we have more adoption? And there's a very specific problem that we have as an industry, which is every user comes to this industry by one venue, which is exchanges. And so that's just broken in and of itself because the use case for speculation is quite narrow.
Yeah.
Certainly a lot of people go to Vegas, Macau, online gambling, but you can't sell someone life insurance or a mobile service or a life savings like an investment product when they walk into Vegas or the casino. It's just like a broken proposition. So you just sort of do it on the reverse, like quite literally inverting the playbook and saying, if I buy business like a mobile carrier, I buy business with 25 million users. They all are, it's like a captive audience that wants access to this stuff. You just turn on the lights.
Okay, so now, okay, let's say that you successfully acquire this company with 25 million users. What do you do at that point? How do you bring it on chain? How do you make it more efficient? And then how do the existing users, both how the existing users feel the benefit from that, and then how does maybe the success metrics of the company increase because of the blockchain integration?
Yeah. Look, I'm not in the business of burning money. I mean, at the end of the day, this either is a viable business or it's not. And it's very concretely, so the last 4 years I've thought about, okay, which business can I buy today that I can make vastly more efficient? And that means cutting costs. Because I think that when you always control costs, you can't, and so when I go in, so where can you cut costs for a mobile carrier, for instance? You can use decentralized infrastructure.
Yep.
To lower data costs. That's 50% of all the costs of a asset-light telco. They got to go buy gigabytes, to service you when you want to.
So just one step at a time. So you would essentially, with this company, maybe first step is deepen network.
Deepen network like Helium. I can lower costs by 40, 50, 60%. Because you're using last mile coordination. You're basically buying data from a network of hotspots that you're using wireless, Wi-Fi, versus a cellular tower. One's really expensive, the other one's not. And what Helium's been able to do in the US is really interesting, coordinating all these different players to hook up this hotspot to their home wireless, and then provision some of that excess capacity to this network. And that's a very cheap piece of infrastructure relative to a cellular tower. So that's like really interesting from a cost perspective. I can lower costs for this mobile carrier using decentralized infrastructure in a very meaningful way. So that's step one.
I guess maybe 50% of that cost gets passed on to the customer, 50% goes to increased revenue?
Totally. Well, maybe not so much revenue. The revenue piece, I think, comes later, which is you become their bank.
Okay.
Why? Because in the same app where they're constantly topping up data and buying the plan, you re-architect that so that becomes a wallet. And that very quickly becomes their way to receive remittances, to save. And mind you, people in Mexico and Latin America can't hold dollars in a bank account. And so imagine the consumer walks in, says, there's no disruption of the mobile service, right? Because, that's sort of like step one. You cannot disrupt. People want to watch the football game. You want to render that, and there's no disruption. But more importantly, once you're living with them 24/7, they go to the same convenience store where the hotspot is located, and they're buying data and they're buying other stuff. That's a cash on ramp to stablecoins. And then you become their bank.
Yeah.
And so mobile is not really a good business. Of course, you can cut costs. The real business is becoming their bank. And how does that business make money? Well, you have interest income because you have all these deposits coming in. You have an interest income. You can launch your own stablecoin if you wanted to. And you can extend credit to people that don't have credit. Basically, that you become either Tether or Nubank or both. These are, multiple billion-dollar companies. What does the consumer see? The consumer initially does not see any of the crypto piece that happens on the back end. Like the re-architecting with Deepen, they don't ever see that. There's no disruption of the service, which is so powerful.
Yeah.
But they definitely will see the ability to do one thing which they've never been able to do, which is hold dollars in a bank account. And you don't call it a stable coin. You don't call it a self-custody key like none of that. You call it basically this is a US denominated savings account that earns you some yield. Everyone, I think, in Latin America and in the rest of the world understands that product.
It doesn't even have to necessarily earn them yield because they're already going to get the benefit of being able to transact with each other at far less cost.
Totally. Yeah,
and remittance and all these.
And the remittance flow, yeah. So that's how you turn an asset like these mobile carriers are not great businesses. They have less than 10% EBITDA margin, operating margin. By lowering costs in this capacity, you turn margin, you double margins if you do it well.
Okay.
And so imagine the outcome. So let's fast forward in a year from now where I've done this playbook. What happens? The biggest problem we have as an industry today is that everyone says this is just a casino. It's only for meme coins. It's only for speculation. And I think this is why I'm doing it, because the outcome of this is all the telco analysts at JPMorgan or the investment banks, say, wait a minute, what have you just done? You bought this mobile carrier, and every other comp in our sheet is 10% EBITDA margin, and this is 20. What have you just done? Surely it must have been AI, that you kind of like used AI to drive efficiency, and you're like, no, it's just one thing, which is what we've been telling you all along, which is it's crypto rails. It's a settlement layer of the internet. You can make businesses faster, better, and cheaper. And that's what's so powerful, because unless we do that, we're constantly going to be discounted as an industry.
Yeah, we totally are. There was a talk at the Digital Asset Summit from Meltem that made me a little bit pissed off, a little upset. Like, it was just, and she wasn't necessarily wrong, but I thought it was phrased in a way that was a bit wrong. I don't know if you saw it, but she just said, look, we've been here for 15 years. We haven't built shit. There's been, hundreds and hundreds and hundreds of billions of dollars that come into the industry, and we have nothing to show for it. I think that's not true.
Oh, absolutely not true.
Because we had to get to a stage, like you said, infrastructure should always be invisible to the end user. I mean, we travel over a bridge and we don't have to check the integrity of the bridge before we drive over it, right? We don't have to check our internet service to make sure that it's working before we use it. It just works. And so infrastructure should always be invisible. It's taken us a long time to build things that, we can abstract away the end piece from the end user. I'm curious though. So now let's go into this idea from Inversion a bit more, and the chain, the DePIN network, the mobile carrier, the neobank. The DePIN network, is that already set up? Would you use an existing one, or would this be part of the acquisition, a part of the strategy?
Yeah, it's very much part of the acquisition.
So then you have to get all the physical infrastructure into Mexico, right, and just set that up from scratch too.
Well, the interesting thing is Helium is already working with a couple of carriers, one carrier in Mexico, and they already have an interesting pilot there. But to give you a sense of perspective, yes, you do have to deploy hotspots.
Yeah.
You either do it and convince normal people to do it. We pretend to do it ourselves day one. So you can imagine you have these partners that have physical distribution. Convenience stores are a great example. They have convenience stores everywhere in the country.
Yeah.
So we work, and we pretend to work with someone like that. We say, we'll deploy hotspots in the convenience store. It's a great partner, because again, that's the convenience store where people go in and buy data and top up their mobile plans.
Yeah.
But to quantify the figure, what does it cost to deploy a network of hotspots, distributed hotspots across a country like Mexico? Just really large.
And my question is, what is the range of one of these hotspots? Because I've talked to another, I forget the name of the project at the moment, but they were talking about this new 5G antenna technology they're using that I think it's about 5-mile range from one hotspot.
Yeah.
Is that about right?
That's a bit much, but the Helium hotspots, there's an indoor and an outdoor, but the range is a bit less than that.
Yeah.
Nonetheless, to give you a sense of perspective, in the US, Helium has now 90,000 hotspots. When it started offloading, it had 21,000 hotspots.
Sorry, it has how many now?
98,000 now?
90,000, okay.
And that has allowed they're now working with 2 out of the 3 largest carriers in the US to do offloading. So this is the idea of switching from a cellular tower to a Wi-Fi network is offloading. Everyone does this to save costs. So it roughly takes anywhere from $10 to $12 million in hardware of hotspots to build a network in a place like Mexico, which is a massive country. So you deploy it in the major cities. To give you a sense of perspective, if you buy $1 billion revenue business that is paying $500 million in data costs, and you cut that by half, you're saving $250 million on data alone on a $10 million investment of CapEx. When I talk about like the unit economics, because ultimately, a lot of times when we think about technology, it all sounds nice and great, but the concrete, it's like, what is the math? Like, does it actually make sense? Like, what is the business case for crypto? And I can tell you, I've obsessed and look at hundreds of different business models. The ROI and something like this is phenomenal. When you think about, I don't necessarily care what the price of Helium is. I just care, is the network reliable, where I can offload so that that doesn't create a disruption in the service. And that's always been the issue, is like, can these decentralized or distributed network be as reliable in terms of uptime and, particularly uptime relative to a centralized player like Verizon, AT&T, or whatever centralized carrier. And so Helium's done some really interesting stuff to guarantee really good uptime and reliability of the network. to the point where when people ask me, well, no one's really done it. Sounds like it's very risky. I'm like, well, what are you talking about? Are you paying attention to what's happening in helium in the US? And so that's the nature of crypto, which is, a lot of things never change, but some things actually do change quite quickly. And there's been a lot of progress that I've just observed by being an investor in a lot of these networks, that it's like, okay, the time is very, very right to do this playbook. Like, to your point about Meltem, I would push back a lot there because, you're old enough to remember that for the internet, it was no different. What pushed the internet so much in terms of video compression and streaming capabilities? It was one industry that pushed the development of that.
Porn.
Exactly.
Yeah.
So you might have sat there and said, wait a minute, this internet thing is totally useless. I hate it because it is used for nefarious or things that I don't agree with. And in a similar manner, like meme coins, for instance, get a lot of bad press in crypto. And, for a variety of reasons. I look at that and I say, wait a minute, you had a president that launched a meme coin, point number one. Sort of crazy timeline. And then he launched it on a Friday night. And then the amount of volume that the network of Solana was able to absorb was 20% of all the volume that NASDAQ does in a single day. I mean, you're sitting there and you're saying, on a Friday, and it didn't break.
No, that's impressive.
And so when I go talk to a network engineer or someone at NASDAQ and I tell them that, they're like, it's pretty amazing. And so again, the speculation is a proof point, and as we built some great technology over the last 12 years. 4 years ago, I couldn't have told you that this could have worked. Why? Because we just didn't have enough proof points on high throughput blockchains. Now I think we can agree we have very good proof points. We have excess demand of block space. Sorry, excess supply of it, not enough demand.
Yeah.
We're at a point where we can actually credibly absorb 1 billion users.
So, okay, so I want to move on to some other things, market dynamics, things like that. But I just want to wrap up the whole idea of the inversion chain, the telco company, the neobank, this whole ecosystem that you're hypothetically building, or you are building. But so how does it work from a centralized and decentralized perspective? There's several different value accrual mechanisms built into that model. There's going to be people who are watching this and saying, okay, like Santiago's building this thing, it's cool. I want to follow along because maybe I want to try to take upside in something he's doing. Or other people are watching and say, I like this idea. I'm going to go do the Berkshire Onchain too. There's plenty of businesses that need to be acquired or whatever. I like this model. But there seems to be some centralized aspects of it to maybe where the value accrual goes to maybe an equity side of the company. Mm-hmm. And then there's this chain that you told me about before we started rolling. And I'm wondering, is that going to be a decentralized chain where you've got open validators who take upside as the chain itself grows and transactions grow? Or is there going to be some aspect too where you build in some decentralization into the mobile carrier or the neobank where token holders or participants can also share an upside?
Yeah.
How does all of that work?
It's an excellent question. So yes, we're launching a chain. So why do we need to launch a chain? Well, if I'm going to bring all these users, hundreds of millions of users, billion users, I want to capture that value in two ways. One, at the portfolio company level. So that business becomes more valuable if we were able to cut costs, we're able to grow that into different business lines like mobile plus neobank. So that creates a lot of value at that kind of company level. And then all the activity, stablecoin swaps, on and off ramps, and every other activity that the user is doing, think of it as the app store, right? Yeah. Comes to our chain. All that activity in terms of fees and MEV, all that gets captured in the inversion chain. That's important because ultimately the idea for the chain came about of two ways. One, we want to create a permanent, a vehicle where we can go buy more and more companies, right? And so you benefit from all of that stream indirectly, right? As we go buy more businesses, well, all of that activity comes to our chain. So, there's roughly 30 to 60 million active users on chain today. With one acquisition, we can become the largest chain in terms of number of users, active users. And so I care about real GDP on the chain.
Yes.
And retaining those users. And the lifetime value, again, the unit economics of that user is far greater and more interesting in our chain. Why? Because we're rendering them a core service called mobile and called banking. That user doesn't necessarily care if Bitcoin's at 100,000 or 20,000. They
don't care if meme coins are hot or not.
Exactly. And so if you look at every other chain, and kudos to all of them, I mean, it's most of their activity is tied to speculation. And so that's incredibly volatile.
And probably spending as much money on marketing as you would do to acquire the whole business. And with your idea, you don't have to be the coolest kid at Token 2049 and throw parties and stuff like that.
Not at all.
Because your users aren't there coming from a speculative perspective first.
I don't want my users to ever know or hear about Inversion. Like again, crypto is very much invisible. That's our North Star. The interesting thing about, you mentioned Berkshire Hathaway. I've learned a lot from that model, which is unlike a traditional fund. So I could do this two ways. I could raise a private equity fund, and I'll raise outside money and try to become KKR or Blackstone. I need to sell that business after 5 years because I need to return that money to my investors.
Mm-hmm.
I never want to be in a position. I never want to sell these businesses. I want to buy more and more of them, like Berkshire Hathaway has done. And so you want to be patient, long-term capital. How do you do that? Well, just to give you some perspective, the chain itself is deriving all these value from the businesses, right, in terms of settlement and activity. You can imagine that chain have decent amount of treasure. If we do this well, I think we can create a ton of value as a chain that brings a ton of GDP on chain and real activity. And then we can use those resources, that treasury, to go buy more and more businesses, basically. So you can become, and I won't stop until I become the largest economy, digital economy. I'll go buy more mobile carriers and turn them and do the same playbook and then do over and over and over. And that's how you bring 1 billion users on chain. And to give you some perspective, so, I mean, you can imagine the treasuries of some of these chains are not small. Ripple is now kind of doing this. They went and did that $1 billion acquisition, $1.3 billion. Sui, I think, was going to go buy 23andMe.
I mean, really? They went out of business or something, right?
Well, they did, but it was up for sale because they have a lot of data. So,
a lot of data.
Again,
my data.
If you are going to have more conversations with like founders or people in these networks, like Solana, all the L1s or L2s, ask them, what are you doing with your treasury?
Yeah.
Because the team, the foundation has a decent amount of the tokens. I'm like, what are you doing with that currency? And I've gone around and done this, and it's like, well, it's a bit perplexing because you have the ability to solve crypto's biggest problem, which is onboarding users in a different way that is not through an exchange.
Yeah. I mean, I guess unless you're in the top, unless you're maybe in the top 100, which I don't see why you wouldn't be if I had that many active wallets and users on chain. But I guess one argument would be that it's not easy if you want to acquire a business for $1 billion to liquidate $1 billion token without getting flack from community or whatever, because you often have to sell those, right, in order to get back. And that's why Ripple
don't necessarily have to, though.
Well, how could you?
You could. I mean, again, the nature of the game is finding the lowest cost of capital to go and running this playbook. So the interesting thing is we've talked about like large private equity funds that have been starting to get interested in crypto. I'm building very much in the open. So I get a call from a large private equity fund. It's like, oh, we're interested in this crypto thing you talk about, like making our businesses more efficient. How are you going to do it? I'm like, all right, well, let's talk, because I don't want to, if I could partner with them, they have a huge balance sheet.
Yeah.
They want to learn how to do this. So there's like a couple different avenues to go about it. Initially, we pretend to raise like an SPV, like a specific, like kind of like a SPAC sort of vehicle to go and buy a business. And we're looking at 5 or 6 right now in Latin America. We're going to do something in the next 6 months. And so now it's a matter of which asset. And so we'll have to raise some money for that. But once you do that and you bring that business on chain, you launch the chain, and then you're in a very interesting position, because if you've done it well, you've proved that you can take a business and transform it with crypto rails. And then you have multiple options at your disposal. You can continue to raise an SPV for future acquisitions. You can use the cash flow of that business to go buy other businesses. You can use some of the treasury. You can borrow against it. You can maybe sell some. It all kind of depends on the market and the premium that you're getting or not.
Yeah.
It's kind of no different than, companies do this all the time. Like Berkshire does this. If you're a treasurer at a company or a CEO, you're constantly thinking, okay, if you're a public company, you're saying, I have all this stock. How can I best use that? I can reinvest it in the business. I can do acquisitions. I can do dividends. I can distribute it back to shareholders. And it's a constant exercise of finding the most productive use for that capital. To give you an example, you probably remember this, but at the peak of the dot-com bubble, AOL was valued at, I think it was like 18, it was crazy valuation. They had like very rich, valuable stock. What did they go do?
You've got mail.
They went and bought a real business called Time Warner, which is 7 times their size.
AOL did.
AOL bought Time Warner, and they call it a merger of equals. And why would you do that? Is because they were in a position where they realized we can't justify our valuation by any stretch of the imagination. But we're going to be smart about using our currency that the market thinks is really valuable to go buy a real business and eventually grow into that valuation. And I think of it no different. Look, I'm gonna lay it to you straight. As much as I'm an investor in these L1s, or L2s, and L2s, we can't justify the valuation of any of them.
No.
Other than Bitcoin, which is, you can't really it's just a commodity. It's based on supply and demand. But if you're gonna value an L1 or an L2 based on like a discounted cash flow of fees and MEV, no matter what crazy wild assumptions you're gonna make over those 10-year projections, you really have to believe that we grow out of this current niche of just the casino.
Yeah.
But of course, when prices go up, people don't really have this sense of urgency.
Yeah.
I very much do, because I want to get to the answer. Like, can we take a business and make it more efficient with crypto rails? Because then you actually credibly believe we can onboard all these billion users. And then you can start wrapping your head around, okay, maybe we're not too crazy in how we're valuing these networks of, Ethereum's a $250 billion asset, Solana's a $70 billion asset. You go down the list, is it worth 80? Is it worth 10? Is it worth 0?
Yeah.
If we don't bring normal users that at some point the addressable market for pure speculation is not small, but it's definitely not at that valuation.
Do you see anybody else in the space doing it well, or you said Ripple's on that path a little bit, maybe. Anyone else that you think is kind of getting to a place where we're going to bring in real users on chain? One of the things that I've always said, and you probably used this example before too, is like decentralized ride sharing application, right? How great would it be to acquire something like a Kareem or a Grab or something like that and put that on chain?
I think so. Like, I wouldn't be surprised if other chains start doing it, if private equity funds, Apollo, KKR, Vista start doing this playbook. I want them to. There's no shortage of companies that you can buy and run this playbook. As the consumer starts getting more used to digital money in the same way they start getting used to, the internet and email, the aperture of businesses that you can buy widens. So I don't want to buy certain businesses because we're not there yet. Like, I wouldn't buy a restaurant chain. I wouldn't buy a consumer-facing business where I'm going to make an assumption that the user is going to all of a sudden ditch his Visa or American Express and use a stablecoin. Not today. But, you can imagine a world that in 5 years...
Most things that maybe like things that are very much able to do peer-to-peer stuff, like maybe like all these food delivery services and things like that.
I've looked at public companies that they're paying a lot of suppliers and employees internationally. And what's interesting there is a lot of their cost structure is paying a lot of these fees to pay these suppliers. And it's a huge working capital drag because it takes time to move that money. You have, these corridors where you have to tie up capital to do like trade credits and all this stuff. And especially employees, if you're paying them through Swift, like that's a very high fixed cost every time you're sending them that paycheck.
Yeah.
Well, what if you bought that business and said, wait a minute, all of your employees, you send out an email and say, guys, this is the steps to onboard to create your wallet. I'm going to pay you now, maybe in real time, maybe in a week's time, and it's going to be through a stable coin. You've just saved that business at least 4%. By a large business, that 4% starts adding up.
Yeah.
But of course, you don't stop there, right? But that I like those businesses where, again, it's equally valuable what we know. We're very focused on what we want to buy. It's mobile for a variety of reasons.
Makes sense.
But I've looked at other type of sort of like taking deep in elements, swapping particular pieces of infrastructure. Like, think about the income statement of a company. You can imagine like there's some fat layered into every single line item. And you comb through every single one and you say, okay, what can I do about this? What can I do about that? And you go down that list. And I can tell you, like, there are very specific areas where you can trim that fat.
Yeah. So you have said publicly that you think that crypto would be even maybe more disruptive or prominent than AI. That's a pretty bold statement. I mean, I was definitely in that camp before ChatGPT came along, and then you just start seeing all like how great this, the LLMs have become. I constantly today am like raving about the usefulness of O3.
Totally.
But I also have always been in the camp. I'm also since 2012 in Bitcoin and crypto, building the space, and I've always thought that crypto was by far the most disruptive thing that was going to happen. And so now I'm a little bit like this when it comes to both. But I'm curious to hear your thoughts.
Yeah, people might be laughing right now because certainly ChatGPT.
First they laugh at you.
ChatGPT is by far very relatable. Why? Because it doesn't require, like, it's very ingrained in its search, right? We're so used to searching on Google, ChatGPT, that the work stream, the flow is convincing that audience. It's so intuitive. So what happens? That ChatGPT becomes the fastest growing app ever. So someone might say, you're out of your mind if you think crypto is going to be more transformational than AI. And I'll tell you why. For the simple reason that, back to the coordination side, like AI will use crypto rails. It will have to use crypto rails. So I think of it like crypto as a foundational piece of technology that sits below everything else that AI does.
Yes.
And crypto comes along and exponentiates what you can do with AI, what you can do with AI agents. Yep. And so it really increases the functionality of what AI can do. And so I think over the long term, so that's point number one, like coordination is vastly more breakthrough in terms of the impact that it has in society.
Yeah.
So the biggest pieces of technology allowed us to coordinate better as species. AI is certainly useful there, but crypto very much allows us to do things and empowers AI agents to do things in a very interesting way. So that's point number one. And the other one is, you know this better than anyone, in investing, what do you want to do? You want to invest in things or bet on things that the market eventually will wake up to. And you hope that the market wakes up to them in a year's time, not in 10 years' time, because being too long-term is indistinguishable from being wrong.
I've made that mistake before, many times.
But again, I do think that we're at this sort of precipice moment where everyone is focused right now on AI. So you want to go buy or invest in an AI company. They're all the rage. You're paying very expensive, what I think, multiples for that type of technology. It's fine. Some of it will come out and be great. But I do think that the impact that crypto will have on the businesses that we acquire is going to be greater than the efficiencies that I'm going to get with AI. Certainly, you might be able to cut down certain functions, back-end stuff, call centers, a lot of those functions in the P&L, like especially like sales and marketing and CRM stuff, you can definitely streamline with AI, and we'll do that. But there's something very concrete about buying a mobile carrier and cutting 50% of the cost. AI is not going to do that. And so the simple answer is, in certain businesses, not all of them, the impact of crypto technology by transforming that business into a crypto-enabled one is going to be greater than the impact that AI has. Like the ROI, the amount of cost that you're able to save, particularly in a business like mobile, is, I think, higher with crypto than it will be with AI.
Let me ask you about this, because, so for example, before Elon acquired Twitter, I think that there was a lot of consensus that, especially those who are in crypto, that we would need some sort of decentralized social media platform for freedom of speech and protecting, mostly for protecting freedom of speech, and also anti-banning and censorship resistant and immutability and stuff like that. Mm-hmm. And then Elon comes along and fixes it, and it gets protected by the First Amendment, and the feeling of the necessity for a decentralized social network decreased, in my opinion, 98% or something like that. Like, I just don't see necessarily the need at the moment. So now when it comes back to AI, I think for retail users, non-big builders, whatever, just for the majority of the population who's been using these LLMs or whatever to improve their daily life, to improve their business, whatever, in order for that AI assistant to be the most efficient assistant possible, it must know everything about you, more than you do about yourself and your deepest, darkest secrets and your IP and everything like that. Right now, ChatGPT knows way too much about me. I haven't told anything deep, dark secrets quite yet, but like, if I need the ultimate advice, I might have to, and I think that is a bit concerning for a lot of people, especially as we get deeper into the conversations with these assistants. And I think that, that there's this idea that having some sort of decentralization or open network where we know that these centralized companies aren't taking all of our data, extracting it, using it, manipulating it against us. So do you feel like there is going to be a public awareness? Maybe it's a leak that comes from ChatGPT. Maybe we find out they're using it for election bias or whatever that comes. Like, do you think that that there will be a need for privacy and decentralized AI assistants and models?
Definitely. So there's a couple of things. One, technology is incredibly a centralizing force. If you look at the vast amount of value that's been created in the internet, it's kind of very concentrated in the user aggregators, TikTok, Facebook, Google. Technology is very centralizing. It's very much a technology that there's like very few people that concentrate a lot of power because they create a beautiful product. It's like sort of byproduct of like, you just created a great service like Facebook.
Yeah.
You have billions of users, you have all this data on them. The user, in all my time in crypto, I've sort of come to the sobering realization that users will not care about decentralization.
Yes.
They care about being rendered a service that is faster, better, and cheaper.
Yeah.
But I do think crypto, particularly in AI, offers us probably the only hope to break away from the natural gravitational centralization force of technology, especially AI.
Yeah.
Like AI, you basically have like the US-based AI models, like Perplexity and ChatGPT, and you have DeepSeek in China. So in a world where everyone's using these foundational models, I mean, there's all very, it's quite concerning in many ways.
It is, yeah.
Like Google Gemini, for instance, I was thinking about this the other day. It's like when Google launched its own AI, like Gemini, you would have like prompted it, like, what's the optimal diet? And it was a very opinionated LLM that wouldn't have told you to eat red meat. You're a Bitcoiner. I think you like red meat, don't you? Isn't that the overlap between Bitcoiners and red meat?
I don't think so. I think Tone Vase is probably there for sure, but
but you know what I mean? Like
I'm more like the omnivore of the healthy gut,
Yes,
Yeah.
exactly. But so the point there is, if you're a user, unsuspecting user that is going to prompt this ALM what the optimal diet is, because you're relying on it for everything, you don't know what data set that model's been trained on, the weights of that model, and so the beautiful thing about crypto is, so how do we push back on that? How do we create these LLMs where you have some sort of verification that the data is not being leaked, like 23andMe leaked all the data.
Yeah.
It's bad services. So crypto, again, is, to your point around AI, is 20 years of foundational research. Crypto, when you go talk to people in AI, it's like you can actually use some of the elements of crypto, privacy, zero knowledge proofs, verification aspects to, if you're a big company and you're deciding which model you're going to work with, I think now you have this possibility where you say, wait a minute, I want to work with a crypto enabled AI model or service because I want verification on the LM. I actually do want guarantees that this model is behaving the way that I want, that I have some transparency into how the model is being trained, the different weights. And it's not an ideology point, it's more of a business case. So I do think there's going to be an interesting area to justify or make it interesting for businesses to realize that crypto fits very importantly in, if you're going to use AI, then I think you want a service that gives you more power to you, Kyle, to say, hey, maybe if I'm going to ever get comfortable prompting data or sharing sensitive business data to the model, I have these guarantees. And again, what does crypto do? Crypto delivers those guarantees. Yeah. So is that going to mean that ChatGPT uses crypto? I don't know. Probably not.
Probably not.
But definitely AI agents will.
Yeah. Really fascinating, everything we talked about, especially from, how do we get adoption on chain? Finally, what I really want to know, after everything we talked about today, for the audience specifically, is like, there's a lot of interesting information, but like, as speculators out there, people who are looking to kind of, get ahead in their financial future, the things that we've talked about, or just even something we have talked about, where should they be looking right now at, placing bets? How could they maybe do a bit of research to find out, how to get into a narrative maybe before it becomes popular?
Yeah. Look, it's for me, it's been, I like to invest in things that I'm using. For instance, when we were investing in decentralized finance, before it was decentralized finance, I was using Maker.
Yeah.
And I was like sitting there and saying, okay, ETH, the value of the collateral backing the stablecoin DAI went from the peak of the ICO boom to like $80. And you're like, and the value of the stablecoin remained the same. It was delivering a lot of value to ETH heads that didn't want to sell their ETH, but needed to pay real, expenses. And so I was like, this is like a really fascinating thing. And then you then start saying, okay, what else can work?
Yes.
I don't pretend to give any advice. Ultimately, you're never going to catch them all. Like when you start investing in crypto, it was one thing, it was Bitcoin, maybe colored coins, and then made safes. And but it was easy to kind of track one thing, develop a focus and an edge. And by the way, the things that is so beautiful about crypto is it's open source, and everything's on chain and the access that you can get to teams is phenomenal. Like imagine, like in what other industry can you go talk to the founding team, the CEO? You can literally join a Discord group. Yep. It's free, ladies and gentlemen. You can go in there. You can start asking questions. I can't tell how many times I've seen community members get hired and join the team and also build real wealth because they were there. They were using the projects. And then maybe they started building on top of the project. Yeah. And so that's the power of this entire movement is open source. Smart people want to work with smart people. There's a lot of really smart people in crypto. And we've all, in this journey, I've had immense amount of help from a bunch of people because they've been generous with their time and I've asked questions that are really dumb, and I still do, but they take their time. And that's really powerful. Like if you're not taking advantage of that, I mean, I can't tell you, that's the only way you build edge.
I think, so on what you said, it's something that I've been thinking about quite a bit lately. I advise quite a bit of projects on their go-to-market, and sometimes, it's rare these days, sometimes you come across founders that say, hey, we actually have to have the token, like it's imperative to operate with it only. Okay, in that situation, then do your TGE, launch your product, hopefully you get the traction. But if a project can launch their product before launching a token, it seems to me like maybe that might be the better path to market for a couple reasons. One is like people can go try out the product and see if it's useful, if they like it, and before they might want to get involved in that ecosystem, which is always a good sign, like you said, like your Maker example. Two, I think that it enables an interesting user acquisition strategy by offering a point system for people who are actually adding value and really not airdrop farmers and these kind of extractors, but if you can build a point system where you can actually track real usage and real value to the network, then I think that's quite interesting. And then three, if you have some sort of public offering, then maybe your real users today are going to want to participate and be more optimistic on the long term and not want to dump those tokens the second they can because they know that this is a valuable product.
Yeah, 100%. I mean, I think we're moving away from let's airdrop a bunch of tokens to people. The retention is not there.
Zero.
Look, I'm all for making your shareholders, employees, and users have skin in the game. Mm-hmm. In a perfect world, if you're using Uber, if you're using YouTube, if you're using these services, I think you should be compensated. You should participate in that upside. If you're user-generated content is what builds value for a marketplace or a platform like TikTok, you should kind of get more share of that.
Yeah,
that's going to change. So I'm all for that. I do think that as an industry, we are stuck like in a rock and a hard place because there's all this precedent where the community says when token, and it says you're not giving me enough tokens, and it's all like, and so we've been in this dynamic where we've sort of like pushed away product market fit and just saying, I'm going to launch a token, make all these, hope to make the community rich, and then somehow, convince people that this is a good product.
Get KOLs to speculate on it or push it.
I come at it with your point around, take your time, understand who your user is, find product market fit. I don't care if you have 10 loyal users, maniacally like loving your product, paying users is better than like 20,000 in a Discord group or your Twitter following that don't care about what you're building. Mm-hmm. So again, no amount of financial engineering is going to fix for a broken product. Mm-hmm. And I think Uniswap is a perfect example. It's like they didn't have a token. it's still one of the best projects in crypto out there. It built foundational platform. Sushi comes along, tries to do a vampire attack, got some liquidity, but then at the end of the day, over the long term, Uniswap just had a better team that constantly has been shipping new updates. And of course, they launched a token, but I think they launched a token at a right time. My question is, if you're a builder right now, can you get away with that? I think the meta is very much you launch a token reasonably early on. Unlike like in the real world, companies take 10, 20 years to go public.
Yes.
It's sort of like whatever comes fastest. You get to 100 million of recurring revenue or $1 billion in revenue, you go public. But in crypto, we sort of like have sidestepped that.
Yeah.
Tokens are phenomenal for coordination. Can be really good for customer acquisition. At the end of the day, like the token is very powerful mechanism. I am of the mind that unlike the camp that says blockchain, not crypto, I'm like, you fundamentally just don't understand.
Absolutely.
That what makes this, unlike a traditional database and open source project, crypto is open source, but the token serves as that ability to map out contributions.
Yes.
In a token. And so there is a place and a need for a token. I will tell you, if you talk to most of the founders, once you launch that token, your life becomes vastly more complicated and difficult as a founder. And so the other thing is we've been also in this dynamic where it's been a pretty difficult regulatory environment. And so I think a lot of the rationale for launching a token, but very quickly giving it away to the community has been to optically say we're decentralized.
Yeah.
We've given away 20% of the supply. It's distributed across all these different people. We're not a centralized project. And I'm actually optimistic where we have good, like, why is it, okay, the word security is sort of like taboo in the industry. People run away from it. We're scared of it. What's wrong with security?
Yeah.
And I think with regulatory clarity and guidance, I'm hopeful and mindful that we can actually call these businesses for what they are, which is Uniswap is a vastly more efficient exchange than Coinbase. It has 1/100th of the workforce. It is global day one. It's tapping into global pools of liquidity. Pound for pound, it is a fantastic business model. Now, does that mean the value is going to accrue to the equity of Uniswap or the token? And we've been in this sort of weird lingo where we haven't been able to just, it's a governance token.
That's
it's like
the hard part because it's a hard part because of this fear of securities. And if I actually had a call with the SEC 2 days ago.
Really?
Can you imagine that? Like it was terrifying and exciting at the same time. It was a pro call to talk about innovation in the United States and like what we're doing and bringing our business into the United States and offering to United States citizens like as a launch pad, which is crowdfunding and being able to offer maybe securities. But that was one of my points is like they're in this space, people have raised capital on these tokens that clearly have no real idea of how the value accrual will happen. And they're just centralized companies and you get a lot of misinformation or misguided information when their X account says, oh, we just partnered with so-and-so. And then you think that now like, okay, this value accrual is going to come to the token when in reality, that revenue is going to the centralized end of the business.
Totally. Look, I think I'm actually going to give a talk in 20 minutes with Evgeny, who's the founder of Wintermute, one of the largest market makers. And the talk is about FUD and market integrity and what's wrong in crypto. I'm like, there is no problem being a security. So what is broken in crypto is that there's sort of like a very disconnected ways that projects share information.
Exactly.
Look, the SEC's role is to create market integrity. And there's one way to do that is everyone needs to have access to the same information and disclosures at the same time.
Yep.
The Edgar SEC, you want to have, there's 10Ks, 8Ks, 13Fs, all these different disclosure mechanisms. The beauty about crypto is a lot of this is on chain. You just need to kind of package it in the right way. So my view of the world is that in a not too distant future, projects can go and register in a very easy way. Why? Because a lot of this data is on chain, it's open, it's transparent by nature, most of it. You're already kind of doing it if you want to get listed on Binance or some of the large exchanges. Like they'll require you to furnish all this information. When there's communications from the team, it's in one methodical way. So to create market integrity, which is make sure that everyone in the community, stakeholders, the team, all have and are looking at the same information in real time, and then they can make their own opinions about buying or selling a particular token. And that's going to happen.
One thing that's that you touched on earlier is something I always explain when I say if you're creating a token, you're creating a digital economy, and you must think of it like that, where everything is as a nation state would run. You're creating a digital nation, like just in the cloud. Right. So you should have governance, you should have taxation, you should have monetary and fiscal policy, you should have incentive mechanisms. Probably, you should have some sort of nomination and voting and governance in there. People who are governing and supporting the network or securing the network should be paid to do so. Right. And if you're an early supporter of the ecosystem or the virtual country, then as that country's GDP and the value increases of it, then you also get wealthy with that country.
First class way. And I think I'm very hopeful that we kind of move away from the decentralize as quickly as possible. Let's actually focus on the business case, which is I don't think you should ever decentralize product. Does the community need to opine on the color of the button on your app? Absolutely not. No. Can they vote on key things about having a board? Maybe, as shareholders do. And so I think you're absolutely right. We need to, I'm very hopeful that this is going to happen relatively soon. And it's great. We have 4 years from this administration. David Sachs and the president's delivered on pretty much every promise he's made on crypto, which is phenomenal. I believe we have a sense of urgency. When we go back to what we were talking about earlier, which is, I'm very focused on how do we bring 1 billion users on chain to this economy, because they're going to receive and be able to capture a lot of value. I believe it. Whether it's Bitcoin, I don't care which chain they go to. I don't think we should, this loyalty to chains is nonsensical.
Totally.
You don't care if you're accessing a website and whatever the backend infra is. You don't care if they're using AWS or Azure. You don't care. You just care about, is the website, is the content good? Is it rendered easily and fast? Is it secure? And so I think fundamentally, when I go talk to other projects, I sort of think of ourselves as we're a layer on top, which is I want to build a better fund. I think I can do that by buying real businesses. We're at the right time to do this. Yeah. From a infrastructure development standpoint, from a regulatory standpoint, and so now I think that's what's so exciting. I actually think I'm earlier now in crypto than I was in 2012. Yeah. Because I don't know, there's something so powerful as saying holy shit, crypto actually now can fit very squarely into a lot of the problems that we have, and really turn a problem into an opportunity, which is AI, the centralization component of it, the data leaks component of it. Fraud online is only continuing to grow. Initially in the early days, people were we're going to blow up systems. We're going to blow up Wall Street. We'll do all this stuff. Yeah. I'm go talk to, and go talk to banks, go talk to funds, go talk to real business people. They'll all, before it was all private, now they're more public about it, like Larry Finks of the world. They all appreciate that crypto is a cost-cutting technology. Mm-hmm. The only department that keeps growing in banks is back office and compliance. You can cut that in a very meaningful way when you have a distributed ledger technology that is atomically settling a swap or a transfer. There's no ambiguity around that. And the regulator loves it because you can be more compliant. It's settled in real time. There's no counterparty risk. It's transparent. So I think I'm very happy to see more of these people that have been doing a lot of the legwork the last couple of years to understand this technology. Entire teams at JPMorgan has hundreds of people working on crypto. Every major bank, every major large institution is thinking about this. You see it very visibly in a place like, the Emirates, right? And I think in many ways, it's we're going to probably see that in terms of adoption. And we're in a funky state of the market where I think people outside of crypto, not crypto natives, are more excited about what's going on in crypto than crypto natives because, price refresh is not going up. Yeah. But I do feel it. And I don't want to come out and saying this time is different. But in all of my conversations as I've gone in this journey of understanding which business I want to buy, how do I do it, who do I partner with, I can tell you there's real interest from institutions, and these are not small by any stretch of the imagination. So I think it's one of those things where I'm hopeful that in a year's time, where we meet again,
Yeah.
this won't be hypothetically building this or hypothetically converting a business and making it more efficient. I hope it can be a Harvard Business School case study of saying, okay, like we need to make crypto relatable to everyone. And it's not the casino. It's way more than the casino. So Meltem is wrong.
Yes.
I love you, Meltem, but it's way more than the casino.
Yeah. Santiago, thanks so much, man. Now you got to go on stage.
Yeah, thanks
really
so much.
Pleasure.
Oh, really nice setup here. Yeah. It was great to meet you.
Cool.
Yeah.